And welcome to the look ahead for Thursday, the 19th of September, with me, Fiona Sincotta, Senior Market Analyst at City Index. Okay, so to start with, we've got Australian unemployment figures will be released overnight. We've also got the Bank of England interest rate decision tomorrow, as well as US jobless claims and home sales. But let's just kick off with the Bank of England. And the interest rate decision. Bank of England are expected to leave rates unchanged at 5% after cutting by 25 basis points in the August meeting. Now, we had UK inflation data come in today, and it was actually a little bit stickier than expected, a bit hotter than expected. Whilst the headline inflation remained unchanged at 2.2%, service sector inflation and core inflation were both hotter than expected. And we do know that the Bank of England are watching that service sector inflation figure quite closely. It ticked up to 5.6%. So that reinforces expectations that the central bank will not be cutting rates tomorrow. The market is still expecting the Bank of England to cut interest rates in November and potentially again in December. Now, we just have a quick look here. This is the sterling US dollar chart. Obviously, we've not yet had the Federal Reserve interest rate decision, so that could change the outlook, or could change this chart quite significantly, depending on whether the Fed opts for a 50 basis point rate cut or a 25 basis point rate cut. That will also sort of impact where we'll see this going. Obviously, if we get a 50 basis point rate cut, then we could see the pound US dollar push higher, particularly if we then see perhaps a more cautious tone from the Bank of England tomorrow. So, I mean, if we just have a look at the levels that we're watching here, you know, we're seeing this, the 2024 high, this is the 132.65 level, just got tested really again today. We saw a push up towards that level. That was the high that we saw at the end of August. Now, if we do get that larger rate cut from the Fed, and then we also get a more cautious sounding Bank of England following that sticky service sector inflation data, then next levels we're looking out for will just be the 133. That's just the round number. Before we go up towards 134. As far as this is on the weekly chart, I mean, if we're going to look for levels, then I'd say 136, around 136, we've got some more resistance to be watching out for. So on the downside, if we get that 25 basis point cut from the Fed, and perhaps the Bank of England do sound a little bit more dovish, which I think is unlikely given the data that we've seen. But on the downside, watch out for 131.40. That's the July 2023 high as support. And then below that, 130. 130 is pretty much the key level, as that's the level below which we see a lower low being formed. Just as far as the US, what's going on in the US, we're just going to pull up the NASDAQ. This is the NASDAQ. We see it's been trading, again, as I repeat, this is just before the Federal Reserve meeting, but we saw that recovery off the 200 SMA. Now we've got this jobs data. Jobless claims are expected to hold steady at 230k. No massive change there. So, you know, as long as we keep seeing data that supports the view that the US is still on track for a soft landing, then I think we're going to see that stocks are broadly supported, particularly as the Fed is kicking off their rate cutting cycle. We saw that recovery from the 200 SMA. It's risen above the 100 SMA, and we're just trying to take out the falling trend line resistance there. So, you know, if we get a move above that, then we're going to see the 20,000 is the next level, which will be coming into focus on the upside. And then beyond there, we're looking at the fresh all-time highs above 20,750. As far as support is concerned, immediate support, we're looking at around that 19,160. That's the 100 SMA. And then really down here, you've got the trend line at 18,600 ahead of the 200 SMA at 18,300. So they are the ones to be watching. Just have a quick look now at the Aussie US dollar. This it's trading up around rose to around a 2-week high. I've got the unemployment data. Jobs data tomorrow is expected to show that the unemployment rate held steady at 4.2%. Now the Aussie has actually recovered really firmly from the 200 SMA that we saw earlier this month. Really steep recovery up to this 2-week high where it traded just below the 0.68 level. Basically, we're seeing that the Aussie dollar has been supported by the more upbeat market move, as well as a slightly more hawkish tone from the RBA as far as their monetary policy outlook is concerned. So, just as far as levels to be watching out for, if we get that big, larger cut from the Fed, then a move above that 0.68 level could open the door to 68.70, which was the high that we saw back in December 2023. On the downside, watch out for 67. That's the level on the downside. If we get a break below that, it just negates the near-term upside, but it'd take a move below 66.15, the 200 SMA, in order to see a lower low formed. So I hope you like what you've seen, and if you have, then please do give this video a like, and for more videos like this, then please do subscribe.